Imagine you're a father, a trucker from Ottawa, Canada. You joined the Freedom Convoy to protest vaccine mandates and lockdown rules that threatened your livelihood and your family's future. The next day, in February 2022, you pull into a Petro-Canada station. Snow crunches under your boots as you approach the ATM inside the convenience store. You slide your bank card into the machine. Declined. Confused, you try again. Declined. Panic rising, you pull out your phone and open your mobile banking app. A stark message stares back. Your account has been temporarily restricted due to a government directive. No warning. No appeal. This wasn't fraud. It wasn't a glitch. It was deliberate. The government had ordered the banks to lock you out of your own money. Overnight, your savings, your salary, your ability to feed your family, gone. And here's the shocking part. This wasn't theft. It wasn't even illegal. It was the law. And if you think this could only happen in Canada, think again. Around the world, laws exist that can strip people of access to their own money, sometimes with zero warning. In episodes 1 and 2, we revealed the hidden contract between you and your bank. The moment you deposit money, it's no longer truly yours. You become an unsecured creditor, lending your funds to the bank, completely at their discretion. But here's what most people don't realize. There's a third player in this game, a player with even more power than the bank. Governments and regulators, they hold the spare key to your account, and they can turn it at a moment's notice, sometimes without warning, sometimes without explanation. In this episode, we're going to pull back the curtain on the little-known laws that give governments and banks the legal authority to freeze or seize your money. Not in theory, not in some distant country. Real-world examples. Ordinary people waking up to discover their accounts locked, their family's security threatened, their lives upended. By the end of this episode, you'll understand the rules of this dangerous game. And I'll share practical steps you can take immediately to reduce your exposure and regain a measure of control over your own money. Disclaimer: we are not financial advisors. This is for education and entertainment only. Always consult a qualified professional before making any financial decisions.
Welcome back. This is episode 3 of our 10-part series, Your Money in the Bank Isn't Yours. If you missed episodes 1 or 2, no problem. You'll find the links in the description, or maybe episode 2 is popping up on your screen right now. Watching those first will give you more context, but you can follow along just fine if you start here. Here's the deal. The more you engage with these videos, the faster we'll release the next ones. And with every episode, we reveal one of the 10 most impactful books on financial freedom. The very books that shaped our community's path, and in our opinion, truly cut through the noise. By the end of this series, you'll have the full list, a ready-made roadmap to the most powerful ideas ever written about money and independence. So hit subscribe and let's dive in.
It's not just your bank that can restrict access to your money. Governments and regulators also hold a kind of spare key. And under certain legal circumstances, they can use it. Here's what that looks like around the world. United States. Laws like Section 981 of Title 18, Civil Forfeiture, and the IEEPA allow authorities to freeze or seize assets tied to crime, sanctions, or emergencies. Example: in 2022, US officials froze yachts, jets, and bank accounts tied to Russian oligarchs such as Roman Abramovich. United Kingdom. POCA 2002 and the Sanctions and Anti-Money Laundering Act 2018 let authorities freeze accounts tied to crime or national security. Example: billions linked to Muammar Gaddafi's family were frozen under UN sanctions. UK courts can issue unexplained wealth orders and freeze assets. European Union. Regulation 881 2000 seconds and Directive 2014-42 EU allow freezing for terrorism financing, sanctions and serious crime. After Russia's 2022 invasion, the EU froze over €300 billion in Russian central bank reserves and oligarch assets. And it's not just oligarchs. Domestic accounts can be frozen for suspected tax evasion, money laundering, or terrorism financing, often before any charges. Why this matters. Once your money's in the bank, you don't always have the final say. By law, your deposits can become the bank's property, making you just an unsecured creditor. So what can you do? 1. Keep some liquidity outside the banking system, emergency cash or insured instruments. 2. Diversify across institutions and account types to avoid a single point of failure. 3. Know your insurance limits. FDIC, FSCS or local schemes only cover set amounts. 4. Consider legal structures or professional advice for large sums. Trusts, separate entities, or counsel. 5. Diversify asset types. A mix of cash, insured accounts, physical assets, or carefully managed digital assets. Each of these 5 steps serves one goal: to regain control over your money before the system decides for you. They're not about panic or distrust. They're about building resilience, making sure that no single failure, bank or law can wipe out your financial stability. Take the time to understand each step, assess your own situation, and get qualified advice where needed. This information isn't legal advice. Regulations differ from country to country, so if you hold significant assets, it's wise to consult a lawyer or a trusted financial professional. Your mission now is simple. Start small. Build an emergency cash buffer and review your coverage today. Keep some funds outside the banking system, spread your money across institutions, know your insurance limits, and consider legal or asset diversification to strengthen your protection. In the next episode, episode 4, we'll pull back the curtain on how banks really create money and why your so-called safe deposits might not be so safe after all. We'll unpack fractional reserve banking, the hidden leverage behind your deposits, and how this fragile system can spark bank runs and bail-ins when confidence collapses. Most importantly, you'll discover clear, step-by-step strategies to help safeguard your wealth, whatever happens next. And remember, the more people like this video, the faster we'll release the next episode. For this episode, we're shifting gears, moving from uncovering the system's hidden traps to learning how to break free from them. Our book pick for this episode is Cash Flow Quadrant by Robert Kiyosaki, a powerful guide that reveals why most people work for money, while a select few make money work for them. It's a mindset shift that separates employees and the self-employed from investors and business owners, and it's the key to escaping the financial rat race for good. But to truly understand why so many never reach that freedom, we need to look deeper into how money itself is created and how banks quietly multiply your deposits through a system that only works as long as confidence holds. And of course, we'll reveal the next book on your journey to financial independence. Subscribe and click the bell so you don't miss it.